On the first day of our 2023 bootcamp, we are going to be diving into a broker breakdown. And one of the most important things about a broker breakdown is going to be the level 2. Now, this is a little bit more advanced, the level 2, but I really want to hit the ground running here. I am going to be going over fundamentals. I am going to be going over the absolute basics, but I want to start with something that I think is going to get you guys thinking in a different manner. I know a lot of you guys probably have watched, simple YouTube videos about, the basics or fundamentals about trading, and I think that's absolutely great. And I know a lot of you guys here already know a lot of the fundamentals, and we will go over it. But I want to start with something a little bit different because I want you guys to also feel a little overwhelmed at first. Now, why overwhelmed? Because that could be taken the wrong way. Why would anyone in the world want to be overwhelmed? Well, just like when you guys are lifting, you guys lift, you exercise, you get tired. Well, just the moment you get tired doesn't mean stop. The moment you get tired means your body is growing, your body is working. Same exact thing with your mind. If you guys are ever lifting and you wake up the next day and your muscles are sore, that's because your muscles are breaking on down to only grow back stronger. Same exact thing when it comes down to stock trading and us learning this information. There may be a time that you're saying, whoa, okay, there's a lot going on right here, but that's awesome because that means you're taking in a lot of information, and you know what? It's going to connect at some point. It's going to come together. So I would rather have you a little overwhelmed than underwhelmed at all times. So let's hit the ground running here with this level 2 lesson, and let's understand what level 2 is all about. So first thing I want you to really gauge is that this is a level 2. If you were here this morning and was watching me trade, you saw me looking at the level 2 a lot. Now, this is a level 2. 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 Level 2s are going to look different, but they're all the same exact thing. So for instance, if I wanted to show you the level 2 from E-Trade, this is the level 2 right here from E-Trade. But if I want to show you the level 2 from Lightspeed, this is the level 2 from Lightspeed. Now, are they different in any sort of way? Let's put on a random stock. Let's put ACOR on this play, and let's put ACOR over here. They're exactly the same. Notice how there's the 108, and here's the 108. Here is, when I take a look over on ACOR, here's 109s, and here's the 109. Notice the time in sales is exactly the same. So they're all the same, they're just different colors. And it really comes down to us as a preference. One of the biggest questions I always get is that, what do all the colors mean? Well, to be honest with you, you can change the colors any way you want. So I can go ahead and I could change the colors and say, okay, I want my level 2 to look like this. Or I can go ahead and I could say to myself, hey, I want the level 2 to look like this. I can make it, somewhat a little bit more like E-Trade. I can go ahead and I can make it look like whatever. I can make it look like this. The colors just come down to preference. So at the end of the day, the whole green and red and yellow and blue is just for us as humans to be able to track these orders better with our eyes. Because if I try to say to ourselves, hey, what's the top bid and what's the top ask, and all the colors look the same, it's very tough for me to be able to see it right away. But if I can see, okay, there's 4 orders on the buy side, there's 6 orders on the sell side, those are at 111, those are at 112, I could be able to keep up with this fast action in a much quicker manner. So just want to get that out of the way because that's a very popular question I get. Colors are just preference for us and our eyes to be able to see that and be able to gain this information better as humans. But let's actually talk about what level 2s are. Why, how they work, what's the point of them? And as I stated, these are all level 2s. All it comes down to is some people like to have different preference behind the level 2. So when we are looking at these level 2s, what is it? A level 2 is essentially the order book for NASDAQ stocks. When orders are placed, they are placed through many different market makers and other market participants. Level 2 will show you a rank list of the best bids and best asking price from each of these participants, giving you detailed insight into the price action. Knowing exactly who has interest in a stock and can be extremely useful, especially if you are day trading, which we are doing the majority of the time. So what is this? Level 2 is essentially going to be an order book. It's showing us who is buying, how many people are buying, at what price, and the size of their orders. That's pretty amazing information because I know that 99% of new traders don't even look at a level 2. They look at a chart. I'll tell you right now, when I'm trading, I don't look at the chart. I look at the level 2. Charting for me is about research. When I have my research set, I stare at the level 2. So for instance, when I am looking, let's say, to trade TRVN, this is a play right now that is live. You can see we're getting a nice sell-off. I take a look over on TRVN and let's say, okay, guys, I think TRVN is going to have a nice dip buy back on down towards the price of 210. That's just a hypothetical trade right now. I think 210, that's going to be a dip buy. I see lower shadows right here. I think that's going to be a nice dip buy. That's me looking at the chart to see my support and resistance areas and to be able to understand where my entry would be at. Okay, if it goes on down towards $2, I'm going to have a stop loss. charts. So the chart is giving me my game plan. But now, once I jump in on my play, I'm focused on the level 2. And I'm saying to myself, hey, I'm in when it's at 210. I'm watching the bids. I'm watching the ask. I'm making sure the bids stay above 210. Going down to 200, I got my finger on the trigger to get out. The ask, again, moving on up, that's showing that buyers in control. Charting's for research to get your game plan, but the actual play is on the level 2. So we want to make sure that we are understanding this. We do our research and then we watch the actual play happen. So it all comes on down to making sure you have the correct order. A lot of times, not on every broker, but there are a lot of brokers that the chart moves after the level 2 moves. I believe on TD Ameritrade, all the candles are in real time, which is great, with every single penny, but some candles are only every single minute. So you would have to wait for all level 2 information to go through and then get it registered on your candle. Don't we want to get the first source? The source where we can see exactly what the price is, the source where we can see the buyers and the sellers and how much they're buying and selling at what time. That's going to be the first source. And then if it relays over to, let's say, TRVN on the chart, we're getting it later or after, even if it's only a second or two. I want to get that information before someone else does, because a second or two is the difference between making hundreds of thousands or losing hundreds of thousands if you're trading a big account. So that's why it's so important to be watching this level 2. So let's start thinking about it a little bit more. We're understanding that it's the overall order book. So why do we use a level 2? Well, it's more in depth than charting. Charting, I can see that the stock has support here, resistance here, but on a level 2, what did I say? You guys can see where someone's buying, how many people are buying it, at what time, and what share size they're buying. We see the exact orders and we get the information first. This is why we use a level 2. So to me, level 2 is 100% necessary. I need to be trading with a level 2. And if I don't have a level 2, I feel like I'm trading blind. I know some people are like, oh, I've been trading my whole entire life without a level 2. Me personally, it would be like, Ricky Bobby, go ahead and put a blindfold over you in a car and just be like, I'm trying to feel the car on out. And you just crash right into a car right next to you. I don't want to do that. I don't want to be driving blind. I want to do my research. Then I want to have a clear windshield of what's actually happening on the road. So trading without a level 2 is essentially trading blind. This gives us guidance on where the stock will be heading next. I rarely even look at the chart when I'm in on a trade. So you'll see, like, a lot of times I'm looking at the level 2 and then you'll see my eyes peek. So yes, I don't just ignore the chart, but my eyes are probably focused more on the level 2 and I'm just peeking over on the chart to just solidify anything that I'm seeing over on the level 2. So let's actually break down the level 2 now, because I know some of you are still probably saying, I don't really understand how to read it. So the level 2 is all about the bids and the asks. The left side is the bids. The right side is the asks. Now, the very easy way to just understand this are the bids are the buyers. So everyone say that, 10 times right now. Bid, buyers, bid, buyers, bid, buyers. If we have bids, those are people that are looking to buy, the BB, okay? So how can we see this? We can see that over on Apple, there is a bid that someone out there wants to get involved on 300 shares at the price of $159.66. There's someone else out there that wants to get in at $159.66 at $1,052. Someone else at 500, someone else with 200, someone else with 400, someone else with 400, someone else with 100. So the first order that is going to go through is going to be this 300, then the 1,000, then the 500, then the 200, then the 400, then the 400, then the 100. So the thing is, you can see that we have a list, and for this to go on down, for Apple to go on down towards $159.65, it would have to take out all of these orders. It would have to take out all of these orders before it can move on down. So how do you get in on the top of the list? It really comes on down to first come, first serve. The person who sets their limit order first, or is continuing to hold their limit order, they will work their way up the ranks until their order gets filled. Now, in 99% of quick plays, your order will be filled just like that. But it's great to be able to realize, okay, who's buying at what price and also who's selling at what price. But the bid is giving us the buyers and the share size. So a bid is the highest amount a buyer is able to pay at the point in time for a security on the sale. The bids posted for a security are displayed on level 1 and level 2. When a bidder places a bid, it is not guaranteed that he will be filled. Every transaction is an open market, requires both the seller and the buyer to agree on the transaction. So if you say, hey, I want to get filled on Apple at 150 and it's at 159, just because you place an order at 150 doesn't mean you're going to get filled. You have to get filled by the current order, 159.67, 159.68 are what people are selling it at this moment. So if we think about what's the ask is just the opposite side. The ask is sellers, people that are already in on this play and basically saying, hey, who wants to take my shares? My shares are for sale. And we have an ask price is the amount of a seller is willing to take in exchange for security within that point in time. It is an indicator of the stock value. However, it can't be taken as the actual true value of the stock. Ask are also referred to as offers. These offers are presented on a level 2 used in the stock market just as the bid. It is not guaranteed that all these offers will be met, as a buyer must agree to take part in this. So when you think about it, everyone close your eyes for a second and think about when you think about the New York Stock Exchange, or even let's say 1990s, 1980s New York Stock Exchange. You walk down in the New York Stock Exchange and you see people doing what? Raising things on up. Yada, yada, yada. Oh, yeah, I got one up here, 500 shares over here. That's people saying, hey, I have a buyer who wants to buy 500 shares of this stock. Is there any seller of 500 shares of this stock? And they're yelling, yeah, I got 500 shares over here. Okay, let's link up. So basically it's this buyer trying to match up with this seller is trying to match up with this buyer to be able to make a deal. Because guess what? This person over here wants to get in at 159.66. This person over here wants to get out at 159.68. Someone has to make an agreement. Someone's going to have to say, hey, you come up to me or I come up to you, and let's go ahead and make a deal. And that's what the level 2 is all about. So when we go ahead and we take a look at it, there are 2 sections in a level 2 window. We have the bid and the buy on the left side. We have the ask or the sellers on the right side. So the bids are always, the left column represents people trying to buy the stock. It shows the total number of shares, the buyers wish to purchase at corresponding price. The bid side is arranged in descending order with the highest bid first and the lowest bid at the bottom. And that makes sense because this right here is arranged the opposite, where we have, hey, we have the highest bid and we have the lowest offer. So I always like to think about it as, let's think about it as a car. And let me see. So we have to think about it right here as essentially a bid and an ask. And what the car is going to be the shares. Okay. So the bidder is saying, I want to buy your car. And the ask is saying, yeah, I'm trying to sell you my car. But we have to come to some sort of agreement. If someone says, okay, I want $10,000 for my car, that's the ask. If someone says, okay, I'll give you $7,000. If the ask says, no, I want to stick at 10,000, he's going to wait for someone else to come up to 10,000 to make it happen. So all we're doing right here is basically bidding. We're bidding and we have an auction going live on who wants to get my shares, and you have to pay me for those shares. So the ask, the right column, shows people trying to sell their stock. It shows the total number of shares that sell wish to sell in corresponding prices. The ask side is arranged in ascending order with the lowest ask on the top and the highest prices below. So now we can start getting an idea of what's actually happening here. Let's keep moving along because things get a little bit more complicated pretty soon. It says the bid and the ask. The difference between the bid and the ask is what we call the spread. And that's going to be how many price points, how many cents or dollars between a possible deal being made. So for instance, if I take a look over on TRVN, is there a spread? The bid's at 236 or 237, the ask is at 238, 239. There's a 1 to 2 cent spread. That's not a big deal whatsoever. But there is a big deal if we take a look over on, let's say, TOP. TOP, there is about a 11-cent spread where the buyer is saying, hey, I want to buy 100 shares at the price of 1064. And the seller is saying, nah, I don't want to sell my shares unless you come on up towards 1075. So there's definitely a little bit of disagreement where someone has to budge. Someone has to say to themselves, hey, I'm going to come up to you, or you come down to me, or something along those lines. And what makes this a little bit more difficult to trade is if you get filled on this play. Let's say I do a market order. I get filled at 1075. And immediately, the moment someone sells, it goes on down to 1070 or 1063. And now I'm automatically in the red. So with large spreads, you can make a ton of money. But also with large spreads, you can lose a ton of money. Because if you have 1,000 shares and you get filled at 1075, within a blink of an eye, boop, you're already down $120. But let's say a couple people buy. Within a blink of an eye, boop, you could be up $120. So large spread plays are more dangerous than plays that are closer spreads like 235 to 236. Because even if you market order in, which means you just buy right into the ask, you are getting a price at least very close to the current bid price. And that's going to make traders happy. So the spread is going to be the difference between the bids and the ask here. So let's keep this going here at this moment. And don't worry, we're going to definitely be doing a lot of recaps and making sure you guys understand. So here's the spread, the bids, the ask, the difference between the two. Remember, recap. Right now, we know the one side, the left side, is going to be the buyers. We know the right side is going to be the ask. And now we're moving through the time and sales. So what is the time and sales? The time and sales, or the TNS, shows volume, shows price, shows direction, shows data, all in real time. The time and sales is a detailed account of trading activity for a particular security. For historical perspective, time and sales is akin to reading ticker tape for the individual stock. It's real-time display of the share volume, price, direction, date, time for each trade. It's used in technical analysis. For example, time and sales data would indicate that a buy order of 76 shares of XYZ went through at this price at this time. So what we have here when we take a look at our time and sales, it's going to be the colors on the side of it. You could see what we have at this moment. You have green and red. What do you guys think green is? Green is when a buy order goes through. What do you think red is? Red is when we have a sell order go through. So when we have a negotiation met, when an agreement is met and someone says, you're going to buy my shares? Yes, I'm going to buy your shares. Boink, it pops on over towards time and sales in green. If someone sells their shares to the bid, that means the stock is moving down. You're selling your shares to the next bid price. Boink, that's over in red now. And this is going to help us also understand volume. Now, volume is a different topic that we will be discussing, but volume, the more orders we have, the better chance we have of seeing a big time spike and big time breakout. So for instance, if I take a look over on TRVN, what do you guys realize about this time in sales? It's moving pretty fast. Would you guys agree that, we have a lot of orders going through? Notice it's green and it's red and it's green and it's red. And we have this guy, 2/3, and now we have this guy and this guy, this guy. We have this. There's a lot of orders going through on TRVN right now. Let's change the stock to TOP. Oh, there's one order, right? What's the difference? The difference is no one's trading TOP. Sometimes I see people get stuck and on these plays all the time. They say to themselves, hey, Deck, I really, really like ROOT. And they say, yeah, I just bought in on ROT. And then they're just sitting here, just waiting, watching. It's absolutely pointless. Right? You don't want to be jumping in on these type of plays where you're just, jumping in on a stock and just hoping that someone else, jumps in on it. You jump in on this play and then you're sitting here at this moment.
Hello? Is anybody there? Hello? Put your hands up.
Right? So we don't want to be doing that. We don't want to be, basically jumping on plays with no volume. So it's great to see where we have volume. It's great to see where we have attention. So TRVN, we always want to be playing stocks that have good attention and we have a good plays with good volume. So it's really nice to know at this point we're starting to break down this level 2, and the level 2 isn't as complicated as it may seem. So we do have time and sales. This just shows us the finalized order of what is accepted. The agreement between the buyer and seller have been met. So what is, and you can see actually the last trade. Last trade is now at this top right here. If anyone is saying to themselves, all right, the level 2 now, let's just grab this. Let's break this on down, because I know when we take a look at this box, to a lot of traders, it's very intimidating. We know at this point, when I take a look over on a level 2, anything from here down, these are what traders? These are all buyers. These are all people looking to get involved on a play. If I take a look from here down, these are all sellers. People that are in on this play looking to sell their shares. We know from here all the way on over, these are finalized orders. These are orders that have gone on through and now are locked in from the time and sales, which is also the same exact thing as the last price. Well, Deck, everything else is still confusing. What else is confusing you? We have dollar percentage change. It shows us that we've gone up $1.67 on the day. We have percentage change, which has showed us that we have moved up 265% on the day. It shows us the lowest price of the day, 77 cents, the high of 288 on the day, the total volume, and this exchange of D you don't even need to know that whatsoever. I'll tell you right now, for the last 9 years of me trading, I've never looked at what exchange it goes through because it does not change the stock in any way. So that's all it comes on down to. Now, Deck, what about all these little colors in the middle? That's just a momentum bar. Almost the same exact thing as time and sales. It just comes on down to, as long as that thing is moving, it's going to have good volume. So if I take a look over on, let's go with TOP. TOP, no time and sales, momentum bar is not moving. It says momentum bar tracks the latest individual trade ticks for the symbol. If I want to go over towards TRVN, let's see, that momentum bar is moving. As long as that momentum bar is moving, what do I know, guys? I know that this is going to be a stock that I may want to be interested on. So momentum bar is moving, level 2 is moving, volume is hot. I like it. So that's what brings in a lot more hype and a lot more attention towards this type of play. But is really, when you take a look over on the level 2 now, is the level 2 that intimidating? I don't think so. I don't think it should be. So let's keep learning more about the level 2, because I hope, again, the level 2, you guys are getting excited about it. And you're saying to yourself, okay, hey, there's a lot going on with this level 2 right here. I kind of like this. So what are the pros about level 2? Well, pros about using a level 2 is we see volume from the momentum bar, from the time and sales. We can see how fast the stock is moving and if it's even worth it for us to even buy the stock. We also, again, get to see all the orders partially. I'll tell you a little difference that in a minute, but it's great to see. We can see a lot of orders where we can see the size of the order. We can develop a game plan based off these orders to see who's in control, and we can see strength and weakness. Now, I know some of you guys may be saying, Deck, I don't know how to see strength and weakness out of this. Don't worry, we're going to get into this in a moment. Now, we have only limit orders show up on a level 2. Market orders will go straight to the time and sales. So for instance, if I go over towards a play here, traders, and I just do a market order. Let's say I want to get involved in BLCM here. This play was a hot stock today. This play, if I go ahead and I just click buy with a market order, who can tell me what happens? When I click buy on a market order, it doesn't show up on the bids. It just goes to the best ask price, which is 103. If I click buy, I get filled right at 103. And I will take out probably this 1,500 guy, 1,100 guy. I'm taking 2,000 shares away from here, right? Which is taking away from the sellers, which is breaking down this wall, which can help BLCM go up higher. Let's imagine this for a second. If I buy 10,000 shares and you buy 10,000 shares and someone else buys 10,000 shares and everyone buys 10,000 shares, we take out the 104s. Then we take out the 105s and the 106 and the 107s, and the stock moves on up. We need to remember a very important fact of stock trading, especially these smaller cap plays. If I buy a play and it moves on up, and you buy a play, and you buy a play, and you buy a play, stocks move up from people buying them, just like stocks move down from people selling them. They aren't randomly moving like the wind. They move from people buying or people selling them. And especially these small micro cap plays that are only $5, $10, some of these plays that have low floats, if you have 100 people buy them at once, they do go on big spikes. And if you have 100 people sell them at once, they go on big dumps. And that's what we call pump and dumps in the market. So the thing is, the level 2 is extremely important to see who has the strength on a lot of plays, because if you start taking out one side, well, we know the other side probably has the strength. So if I do a limit order for say though, it's going to pop up on the bids. So I'm going to go to a very kind of dead stock right here. Let's go to OMH here for a second. So notice this, team. If I did a market order, I'm going to get filled at 690 on OMH. But let's say I do a limit order. Okay, limit order, and let's say I want to get filled at the price of 651. Okay, I want to get filled at the price of 651. I want to be a buyer. Let's see. It might not show up. It might show up right underneath that 652. Let's see here. 651. Click buy. Yes. Bada boom. Guess what happened? There I am. You guys see me right here? 652. 2,000 shares. And guess what just happened? This stock now just bumped up to 653. We just bumped on up to 654. That's me in the yellow right there. I'm going to cancel this order. Okay, so I'm going to go to my broker. I'm going to cancel this order. Boom. I'm going to cancel this order. Now I'm gone, because that's the live order book. Now, guess what happened? Other people left with that too. People got excited for a moment when they saw that a 2,000 share order is coming through. So they put in orders at 653, 654. Watch this again. Watch how neat this is. So I am not getting in. I'm going to do an order at the price of 650 right here. The bids, 650 bids. And let's put an order on 650, click buy. It's a limit order. There I am right there. Now let's see if anyone gets excited and maybe goes 651, 652, maybe puts an order at 653, because that's me. That's me at this time, where I'm saying to myself, hey, if I get filled at 650 and now people are saying to themselves, hey, there's a nice, we have this on our side. I'm going to cancel this order. Boom, cancel it. And now that's gone. So did everyone see that? That's what I want you guys to be able to understand. That's what I want you guys to gauge out of this play, that when you put on an order, on a limit order, it shows on up. Now, can anyone start getting the juices flowing on how people may start manipulating stocks? I'm going to teach you guys that here in a second, on how people, again, may start manipulating certain plays, and that's going to start getting interesting here. So what we actually have is only limit orders show up on the level 2. Market orders go straight to the ask price. So those are kind of the cons of this. So now let's actually try to figure this out. How to read volume on level 2, which we already discussed about is the time and sales, and we can also see the momentum bar. But I want to talk about how to kind of show strength. How people see strength on a level 2 and how people see weakness on a level 2. What is stacking? Stacking is going to be very important. Stacking is when there is a large increase of either bids or ask on a level 2. This will show us if longs or shorts currently have control. More bids equal strength, more asks equal weakness. What this picture is we have the bids. There is one buyer at 29.33 with 600 shares. There are about 7 sellers with 1,000 shares, 1,000 shares, 1,000 shares, 1,900 shares, 200, 100, 100. Let's think about this in the most brutal aspect. Let's think about this as if this was a fight. If this was a street fight and there was 7 against 1, who would win? 99.9% of the time, the 7 is going to beat up the 1. So what does this mean? The ask, or the sellers, or if you want to think about it, the ask is also the shorters, the people that want the stock to go on down. Guess what happened? They're most likely going to win. This shows that there is a lot of people selling at 29.36, and they have good size orders at 29.36. Most likely, even if people buy 29.36, buy 29.36, buy 29.36, unless you get a big influx of buyers, you're not going to break down all these orders. There's better chance of someone saying, hey, I'm going to sell my shares to this guy at 29.33, and now we're down at 29.32. And there's only 600 shares there now. So again, that guy's probably going to get taken out, and then we find a little bit of support down towards 29.31. So in my mind, I kind of think about it in a different way. In my mind, I think about it as a battle. I think of like the movie 300 a lot of times. And I think a lot of times we have the Spartans versus the other guys. We basically have one army versus a different army. We have the buyer army versus the shorting army. Because the ask is not only sellers, it's also shorters that want the market to fall on down. And the whole goal of the buyers is to push the ask back, break down the walls of the ask, make the buyers, again, continue to push on up. The ask, on the other hand, the shorters are doing the same exact thing. They want the strength, and they want to push down the bids as much as they possibly can. So when we take a look, let's see if we can get a good trade here, and let's try to figure this out. So I would say at this time, if we take a look over on TRVN, remember, we can do our research on the chart. What did I tell you before? 210 was probably going to be the best bounce play. Why? Because we have past chart history. So in my eyes, at this moment, I would say that the buyers do not want this going underneath 210. To me, I think in my head, we have that's home base. You have this army, you have the Spartans, you have whatever. 210 is where they feel safe. Hey, anyone comes at 210, we have bounced them away every single time. You come on down to 210, we bounce them away every single time. So I know 210 is where basically buyers have to hold, and they have held. They're very strong there. And that's going to let me know, okay, hey, that's where we have a lot of strength. But if we go underneath 210, we could easily start falling back on down. So I would say at this point, essentially, I have 240. We come on up, 240, we come on up, 240, we come on up. All right, now I basically have my home bases in my mind. I know that one side wants to hold 240, the other side wants to hold 210. Now I can watch the bids. The bids right now are sitting at 218. So as we go, let's try to figure out who has the strength, who has the weakness. You can watch the chart as it goes, but I want you guys watching the level 2. Right now, shorters are trying to break down 210. Now watch how many buyers are going to try to move in as we are at 215, 213, 212. So we came on down to 215, we're at 218. Watch to see how many buyers. Right now you can see it's basically equal. It doesn't look like anyone has too much strength over the other guy. We hit 216, we're back up to 219. All right, so we're hitting 216, we're right back up to 219. Buyers know they need to hold 210. They need to hold that blue line. All right, buyers are starting to give it a little bit of a run. Buyers are trying to fight the sellers here. We know the shorters, the shorter army right here is trying to push them down. They're saying, hold your ground, guys. Let's bring them down to the teens. All right, guys, we got them to 218. Let's keep on pushing. Guys, get them to 217 now. We got them to 216. Buyers are saying, guys, we got to pick up here. We can't let them go underneath 210. 216. They are starting to kind of get pushed back a little bit. Basically, I think of like a cliff and them trying to push it off the wall. Guys, they're at 214. Shorters are starting to pick up steam. Shorters are trying to pick up more momentum. Now we have the bidders at 215. Now watch though. Watch how many buyers are going to try to come back in every time around 215, 214, because we know that this is home base. We know that this is a buy here. We know that this is a buy here. We know that this is a buy here. And I can almost predict now that if we lose home base, we're going to see a crack. If we lose home base of 210, it's basically all the whole entire buyer army says, everyone just run for your life. They get pushed off the cliff. So right now the shorters are doing everything they can to push these buyers off the 210 cliff. And buyers are going to do everything they can to be able to make sure they stay above that 210 mark. And if you're asking me who's in control at this moment, shorters are in control. Puts are in control. Sellers are in control at this time. That's who I see in control. 213, 212. Shorters are in control. 210. All the buyers right now are giving it their last chance. Buyers have to get above 210 here. If this cracks, we're going down to the VWAP. Buyers are trying 210. Watch the level 2. Oh, they're starting to run for their lives here. Let's see if we crack $2 now. If it cracks $2, buyers are running around like this at this moment, just trying to hold this on up the best they can at this moment. They had a little bit. They're trying. Notice it's fighting that 210 mark. So you can see how buyers are trying to hold that 210 mark and trying to push back up towards 210 at this moment. If they could ever get back above that 220 mark, that's where they're going to be safe and feeling good. Right now at this moment, you could see 210 trying to hold, 210 trying to hold. Little bit of have a crack at 210. Buyers need to hold 210 so closely right now, but the shorters are not letting it on up. Shorters are basically saying, guys, keep on pushing. We almost had them there for a second. If we can crack underneath the support line, we can go all the way down towards the VWAP. Keep them under 210 and they will give up. That's what shorters are saying. Like, and this, just by looking at this level 2 right here, it's already telling me I would not want to be on the buy side at this moment. It's telling me that, Sean, I would not want to be on the buy side unless we start getting back above 220, because that would show a little bit of strength for buyers. But here comes another 210 battle. 210 battle down towards 208. The shorters are going to try to take over 210 now. They're going to try to take over their home base. Shorters, ask are staying at 210. The ask wants to keep pushing forward. The bids are going to try to get up to 210. Ask are doing great right now. Keep moving on down. They're charging 208. Can the ask keep on pushing back to 205s? 204s here. Can we get the collapse? Our bidder's about to run. There's a few army guys left saying, I'm not standing my ground here. I'm doing everything I can. I'm dying with the ship if I have to. And the shorters at this moment, the ask are trying to break down 205. Let's see if we can go underneath 205. But look how many big orders there are. 6,000, 6,000. And they're still breaking them down. You guys see how many big orders we just went through? Now look at the collapse right here. Look at the dump. So you could see just by looking at this, in a quick little example, you can see what you need to accomplish on every single trade. You can see how it works. And now guess what's happening? The ask, the shorters are now taking over their home base of 210, and they're not letting them get back above 210. Now they're not letting them get back above the 210. They're trying, the buyers are saying, we want 210 back. The ask is saying, no way. 210's ours now. 207, you guys go on down to 190. Take that base. Take the base back down to 190 if you guys want to. The ask is now again taking over 210. They're saying, hey, we got a whole bunch of bread and good stuff in here, and some hot wings left over on the table, and this place has cable. I'm good. So now the ask is now going to be holding 210. We know 210 is kind of that very specific area. That seems like that was the main area mark so far. And the ask and the shorters are still in control. I can see that this has a lot of momentum. I could see the low, the high, the percentage change, the last trade, the time and sales. I don't look too much at the time and sales. I more focus on what the bids and the ask and the battle going on between the bids and ask. But I know right now that the ask, the shorters, they are holding that 210 mark. But this was a very small example on being able to see how I read the level 2. And yes, in my head, guys, when I'm trading, I know it sounds silly, but in my head, I am literally just imagining a battle 24/7 when I'm trading. And that's going to help me understand who's in control at this moment, who's in control at this time, who's in control on these plays. Does that make sense for you guys? And it does take practice to be able to see. And it does take practice, but you guys will be able to get this. So let's start thinking about this in a different manner now. So stacking, we just talked about, shows us who is going to be in control. When we have a lot of orders on one side, we can expect that most likely the other side is going to collapse here. But stacking is not always effective because we also need to remember about share size. So if we think about this, if we think about share size here, one big thing that was huge over on TRVN is not only, let's say, do you guys want to look at how many people are buying versus how many people are selling, but you have to look at the share size here, okay? And the reason why share size is important is imagine this battle as we have been imagining, but imagine it as different age groups. So let me ask you guys this, okay? If this is the level 2 and you say, all right, Deck, we only have one guy buying. There's only one guy buying here. And this one guy, he is buying whatever stock, let's just say SPY, right? This is just an example. He's buying SPY, but he's buying 10,000 shares. And then you say, okay, then there's a ton of sellers. Tons of sellers, tons of sellers, tons of sellers. I know a lot of people would say, oh, hey, Deck, the stock market's going to fall right here, or the SPY is going to have a pullback. And I would say, why? And you would say, well, look how many sellers there are. But let's say there is 50, 100, 75, 50, 10. There's a 10,000 share bid order. There is right here 50, 100, 175. There's about 300, right? 300 buyers. So yes, if these were equal and it was 10,000, 10,000, 10,000, 10,000, it's basically like a street fight where it's 7-on-1. And who's most likely going to win? Most likely 7-on-1 if it was a street fight, right? We're going to see the 7 guys beat up the 1. But essentially what we have here, it is 7-on-1. It's 7-on-1 for sure. But the thing is, it's like basically little toddlers. It's like little toddlers right here. And you're a full-grown 30-year-old man just, ready to punt these kids across the room. So you have to also look at share size and take that into account, because you could have 7-on-1. I don't mean to be this guy right here, but if 25 little kids came up to me and tried to beat me on up, I think I could take them. I don't know if there's a number, honestly, in history that that amount of 4-year-olds could beat me on up. All right, bring on 10,000 of them. I'm taking them out. All right? We're getting a little carried away, I think, at this moment, but I want you to understand is that it all comes down to size, which is almost like age group out of this fight, okay? You can see how we're basically floating around 210 now. 210, whoever can hold 210 is basically like the make or break. All right, 210 is almost like the make or break. So now we're starting to get, I think, a true understanding of how this level 2 works. But now, team, I actually want to go something very interesting here. I want to kind of move on, and let's go with, to determine a stock's direction, we have to look at who has the bigger orders, how many orders there are, and of course, momentum. So that's why it is very important to be watching and practice the level 2. The level 2, there's a lot. Traders, sometimes I would just not even trade, but just practice looking at the level 2 and do that battle in your head and try to figure it out. But I'm going to show you a way right now that a lot of people manipulate stocks. This is a way that a lot of people with very large accounts manipulate plays. Now, it's not illegal in any sort of way, and the reason why I'm teaching you it is to show you what to watch out for. Just like if you went to hacking school or you want to learn about computer security, you learn how to hack into computers to be able to learn how to prevent them. And I wanted to show you how a lot of people manipulate stocks so you guys don't get caught up in manipulation. This is no way or means of me telling you to manipulate plays. This is no means of me showing you on any way that I've ever manipulated a stock before as well. This is a disclaimer telling you that do not take this information to go ahead and use it in a negative manner. I take no responsibility towards that in any sort of way. I want to make sure everyone is learning and trading the right way, the correct way, and that is what I teach, and that is what I want everyone to be able to be doing. So now that we got that out of the way, let's talk about how people trick the market here. So very easy and very simple answer. I always give this guy, his name is Vladimir. And Vladimir is a multi-hundred millionaire from Transylvania, okay? And he finds out that he can learn how to manipulate penny stocks. And the way that this happens is that they do something called spoofing. And the only way that you can spoof a level 2 is by having a large amount of money. So this is what they do. Let's say it would be TRVN, but for an example, I'm going to show you on a very dead play. So what Vladimir would do is he would look at a play like SNES. And SNES, he would buy in shares. He would buy in 3,000, 4,000, 10,000 shares, whatever it may be, okay? But now, since Vladimir has such a large account, he's going to put in spoofing orders, which would be fake orders. So he would go over towards SNES. He would type in 141 right here, or he would honestly type in probably 140 or 139, and he would put in a very large order. Let's say he did 10,000 shares. Now, 10,000 shares really isn't that big on a $1 stock, but this is just an example. He would do 100,000 shares. He would do 200,000 shares, and then he would click the buy button. So he clicks buy, boop, and guess what happens? There I am right there. That's me, right? Me being right here on a hot stock. Let's imagine this was 100,000 shares. It's going to make people that are buyers say one thing. They're going to say, whoa, why is this guy buying 100,000 shares? If he's buying 100,000 shares, oh, look it. Now people are starting to buy. There hasn't been any buy orders until I put my 10K order here. People are starting to buy. I'm actually going to get rid of this right here because I don't want to do this, but I'm going to get rid of my orders. See, it's not there anymore. But the thing is, when people see large orders, they say to themselves, whoa, there's a large order here. This guy's putting in $100,000, $200,000 into this play. Guys, this is going to make the stock go up very high. People that are shorting the play and saying, I want it to go down, they're saying, man, there's someone that just put $100,000 wall there. We're not going to get through that. I'm going to get out of my play now. So not only are you bringing confidence to buyers, but you're also putting fear into shorters and getting them out. So the whole point of this is they never put in an order at the top area. They put it in the red, they put it in the yellow, they put it in the blue, because their intentions aren't to get filled. In the green, their intentions are to just have it there so you can see it. So what Vladimir would do is he would put an order in at, let's say, whatever, 5,000, 10,000 shares, and he would already have his order in. Then, since he already has his order in, he would say to himself, all right, hey, I want to push this stock up. I want to scare out shorters, or I want to make buyers feel more confident. Let's put 100,000 shares in this play. Click buy. 100,000, there's 10K as an example. And there now buyers feel more confident. Now shorters are saying, whoa, does anyone see there's someone again buying 10K share? I'm going to get out of my play here. I'm going to move on from this play here. And I'm going to cancel this once again, just on my end right here, just a little heads on up. I'm canceling this, boop, canceling it. And now it's no longer there. So you guys can see this over on how this works. So that is very important. That is very important that you understand the spoof. So if we ever hit that order, a lot of times they cancel it and they never want to get filled. So the thing is, traders, if it does not work, it usually leads to a very big drop. Now, it's hard to do it on the number one top play that's the most active, such as TRVN, but a lot of times they do it on like those medium plays. Because what would happen right now if we see, like, for instance, I see 7,700 shares at 209. That's not a huge order, but it's bigger than all these orders of 400, 2,000, 100. To me, I'm saying 209 is going to be tough to break above. 209, there's a 7,000 guy there. Let's see if we can get above him. It's not massive, but let's just see what happens. 209, see this 7,700? 7,700. Let's go up to 209. Oh, he's not even there anymore. He got rid of his shares. He could just be like an intimidation factor, trying to intimidate, people from trying to get up towards that area. And that's sometimes what it is. It's the intimidation. There's a 10K guy. 10K guy at 208. 10 guy at 208. Buyers are trying to push through him. And if buyers push through it, that usually leads to a pop. So notice what we just had. We just had a 10K order just get taken on out. That gave buyers confidence. When you see big orders get taken out, it brings buyers confidence. But a lot of times when it's a huge order, and I'm not talking about 10K, I'm talking about 200K, 300K. I'm talking about big orders, guys. It makes everyone sell their shares off or gain a lot of confidence. Now, a lot of people would say, Deck, how is that not illegal? Well, the thing is, it's not really illegal because what are you doing? You're not doing anything wrong. You are just placing an order. And the thing is, you're placing the order, and if it comes down to your order, you cancel your order. Well, Deck, the intentions are, you're trying to push up the play. Well, the thing is, you can't control how other people are going to think. It's like, hey, if I put a big order in there and someone wants to think that the stock is strong and they buy it, well, that's on them. And if people get out of it and they sell it, that's on them. All I did was place an order. It's not like, if someone does that, the jail door shut and someone's like, what are you in here for? I'm in here for, you want to know? You really want to know? Let me tell you right now. I've seen a lot of dark things in my days, but have you ever in your life put in a limit order and then right when it was about to get filled, you canceled it? You ever put in 100,000 shares over on TRVN at around 11:45 in the morning? You ever do that before, bud? No, you haven't. All right, so that does not happen, but it is just one way that a lot of people like to manipulate the level 2 in one way or another. And that's what we see. We see that a lot. So whenever you see big orders, don't get scared out of it. If you hit that order and it disappears, most likely it's going to dump for you, or it could go against you if that big order is with you. So just make sure you understand that spoofing is a very big thing that happens in the market. But traders, so far, let's do a nice little recap of what we have learned out of level 2. Level 2, we know there's different looks of level 2. We know we have our bids. We know we have our ask. And we have all information up on the top. We know that we need a level 2, or it's almost like a trading blind. Bids are on the left, ask is on the right. It's basically just an agreement. We know the spread is the difference between the bid and ask. We're looking to be able to make an agreement with a seller or with a buyer. Only limit orders show up on level 2. Market orders go straight to the ask. The time and sales give us the latest transaction, which is also the same thing as the last price. Level 2 show us volume, show us activity. It shows us weakness and strength. It does not show us market orders. And there is also ways to tell of strength and weakness as well, with stacking bids by order size and by how many orders there are. And there also is manipulation from traders placing big orders to try to scare people off other trades. Man, ladies and gentlemen, what I want you guys to do throughout the rest of this morning is to notice and ask yourself, go over to TRVN. Try to find a battle between support and resistance and see who's in control. Do it tomorrow. Do it the following day. Keep becoming better on the level 2. Do it on the S&P 500. But every day, start studying this level 2 right here so that you are becoming a smarter and a better trader. Also, as we talked about, the colors are just to show us the highest bid and the lowest ask, followed by the second, the third, and the fourth. But everyone's level 2 is going to maybe look slightly different from colors, but all have the same exact information. Whenever people say, what's the best level 2? There is no best level 2. It's all the same thing. It just kind of comes down to the way it looks. But ladies and gentlemen, we are wrapping up right now day 1 of our trading bootcamp.